Hello everyone, welcome to Rajeshwari's Commerce and Management Study Hub. I am Rajeshwari here. Today we are going to discuss in our class compensation levy. What exactly the compensation levy is? See, compensation levy means it is a optional scheme. It is a optional scheme which is given for the small registered person. See, it is very important. You have to understand because based on that, now I have said the compensation levy is a optional scheme, right? And it has been given to whom? Small registered person. Now, see, they are given a threshold limit already. Aggregate turnover, when aggregate turnover exceeds the applicable threshold limit, then only the person will become liable for the registration. We have understood in the registration chapter, right? In registration, person who is, when he becomes liable, when the aggregate turnover exceeds the threshold limit, then the person becomes the liable for registration, right? See, once you become registered, it is not easy task. It is not easy task for you, right? Because there will be a n number of compliances. There will be a n number of compliances. See, you need to take care of it. And the so many compliances, like you have to file a return month on month, you have to maintain accounts, you have to maintain records, you have to make the payments of the GST. See, there are so many compliances, issues will be there, invoices, invoices you need to generate. See, multiple compliances will be there. Now, see, what the GST department has said, because to maintain all these records and to meet all these complaints, the cost whatever you are incurring, no, that was paid by the registered person only. So, what the government has told, it is okay if you are a registered, but if you are a small registered person, if you are a small registered person, now tell me how they will decide small registered person. There will be a registered persons. We know only the aggregate turnover when exceeds threshold limit, then the person becomes the liable for registration. Now registered person, under that only we have small registered person. How they will decide the small registered person? Always remember, whenever they want to link, they want to decide any eligibility criteria, any kind of other criteria, they always link with the aggregate turnover. They always link with the aggregate turnover. They have given, see, turnover. If you remember in registration, I have showed you how the threshold limit is. But here, a prescribed limit will be given. Prescribed limit will be given. That person, then he will become, he is treated as, if he is coming under that, then he will be treated as a small registered person. And they have given one optional scheme called compensation levy. An optional scheme called compensation levy. If he is registered person, he gets some relaxation. What are those relaxation? He no need to file month on month return. He no need to file month on month return. Quarterly return no need to file. Only he will file one return for the entire financial year. GSTR 4 you will file. And you will get exemptions from maintaining the records. He will get exemptions from maintaining the records. And invoices. He is not he will not give the invoices, but he will provide bill of supply. He will provide bill of supply. Here you can see what is the purpose of the scheme. As I already said, this reduces the compliances cost to the small taxpayer with turnover up to the prescribed limit. See, whom you will call it as a small registered person? Who with the turnover, who have the turnover up to the prescribed limit. Then they will be called as a small registered person. Then they to reduce the compliances cost. And compensation dealer, no, do not need to worry about the classification of goods, service, GST rates. And they don't have any no need to issue any tax invoice, but what he has to issue bill of supply with no tax charged to the recipient. And eligible person pays the tax on their turnover every quarter at the prescribed rate. At the prescribed rate, no ITC will be available, and return is filed annually. Return is filed annually. Now, if you are a composition dealer, you are opted for the compensation scheme. You are a compensation dealer. You have opted for the compensation scheme. Then you will be permitted to pay the GST. You will be permitted to pay the GST at the discounted rate. What is the advantage? Now understood. What benefit the compensation dealer is going to get? The compensation dealer will get if you are a compensation dealer, if you are registered under the compensation scheme, then you are going to pay the GST at a discounted rate. At a discounted rate. Is it clear? Yes. Now, compensation dealer. One, there are certain conditions. What are those conditions? You can't collect from your customer the tax you used to final consumer base the tax, right? But in the compensation scheme, compensation levy, you can't collect it from your customer. You have to pay it from your pocket. You have to pay it from your pocket. For the purpose of discharge of GST, you can't use ITC. You are not availing ITC. Discharge of tax liability, you will make in cash. You will make in cash. You can't use ITC. And you can't pass on ITC to your customer. Pass on ITC to your customer. Now, see, compensation scheme. We have section, that is under section 10. Under section 10. It has been divided into two: section 10 subsection 1 and section 10 subsection 2, section 10 subsection 2a. Let us understand what is this. Here, compensation scheme for the goods. Compensation scheme for the goods. Compensation scheme for the services we'll understand later. First, we will discuss what is the compensation scheme for the goods. Now, who can opt or eligible? Who can opt or eligible? Here, you can see the person manufacturer who involved in manufacturing of goods. manufacturing of goods. Who involved in trading goods? Who involved in trading goods? Who involved in restaurant services? Restaurant services. Who provides all these three, and only these people eligible for the compensation scheme under section 10, under section 10 subsection 1. Even if you are a manufacturer, trader, restaurant service provider, providing in the financial year up to a certain limit, then only you can opt for the compensation scheme. Then only you can opt for the compensation scheme. What is that prescribed limit? What is that prescribed limit? Here you can see. The prescribed limit 1.5 crore in the financial year. Turnover limit for the compensation levy of goods is 1.5 crore in the financial year. If you exceed this, then you have to opt for regular scheme. If you are below this, then you will be eligible for the compensation scheme. This is for the all other states and UTs. Then what are the other states? We have special category. We have special category. 75 lakh. 75 lakh. That is general category states and UTs. That is Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. For these 8 states. For these 8 states, aggregate turnover in the previous year should be below the 75 lakh. Remember, what are those 8 states? The 8 state special category states are Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. Other states, other than this 8, the remaining all the states, all other states and union territories, 1.5 crore aggregate turnover. Now, let us take one small example. One small example. See, in the year 24-25, in the year 24-25, you have opted for the compensation scheme. 1.5 crore you have reached in the December. From Jan month, you have to opt for the 1st of Jan. You have to withdraw from the compensation scheme and you have to register for the regular scheme. Now, we have understood the turnover limit for the 8 states, special category states, and all other states. And we have understood who are eligible. Now, let us understand what is the rate of tax. As I already said, you will pay at a discounted rate. At a discounted rate. So, what is this discounted rate? For the manufacturer. For the manufacturer. Other than manufacturer of notified goods, that is ice cream, pan masala, tobacco, aerated waters, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil mills, or similar siliceous earth, building bricks, earthen or roofing tiles. See, if you read this list, notified goods, you can see this notified goods comes in the registration also, right? Registration also. Here, they said other than manufacturer of, that means you can involve in trading. That means you can involve in trading of these goods, but their making of goods, you should not involve in both manufacturing as well as trading, but here only manufacturing. What is the rate? 0.5% of the turnover in states or union territories, UTs. 0.5 plus 0.5, 1% will be effective rate of return, effective rate of tax, effective rate of tax. Then supplier of making supply referred to in clause B of para 6 of schedule 2, referred as restaurant services. Restaurant services, 2.5%, 2.5% of turnover in state and duties. That means CGST and SGST, 2.5 plus 2.5, the effective rate will be 5%. What is the effective rate? 5%. For trading, it is 0.5% plus 0.5%, 1% of turnover of taxable supply of goods and services in state. See here, you have to observe. Here only turnover is mentioned, here also only turnover is mentioned. But in this case, taxable supply of goods and services, turnover of taxable supply. What is this taxable supply? Now, your place of businesses, Karnataka and Andhra Pradesh. Your place of business in Karnataka and Andhra Pradesh. You are doing a taxable supply. You are doing a taxable supply of 10 lakh in Karnataka, 5 lakh in Andhra Pradesh. Exempted supply. Exempted supply. Exempted supply you are doing 2 lakh and 6 lakh here. Now, what is this turnover? The turnover means here on total amount 10 plus 2, 12 lakh here, and here 6, 5 plus 6, 11 lakh. This you will make it as 2 lakh, 7 lakh. 7 lakh. Now what is the percent? 1% here, and you for this also 1% you are paying. Is it clear? Discharge of whatever GST you are collecting, that will be made in cash. You can't use ITC. Even the recipient can't take the ITC here. So what is the effective rate? 1%. This is on total turnover. Total turnover. This is in case of the manufacturer. This is in case of the what? Manufacturer, restaurant service provider. For the manufacturer and restaurant service provider, you will take on total turnover. That includes taxable supply and exempted supply. In case of trader, you will take only taxable turnover. Only taxable turnover. Taxable turnover means only on this amount. Exempted you will not take. Exempted you will not take. Is it clear? Now, here you can see there are includes and excludes are there. For the aggregate turnover, we have already discussed in the registration chapter. Just for your understanding, I am repeating. Value of supply from 1st April of financial year up to the becoming liable for registration, we have to take it, and that is aggregate turnover. Exclude exempted supply of services, whatever they have provided by way of extending deposit, loans or advances, insofar as a consideration in represented way of interest or discount. This will not be included. This is excluded. Okay. Now, who are not eligible? Who are not eligible? Who are not eligible to opt for the compensation scheme under section 10 subsection 2 and 2a, it is there. Now, registered person who is not eligible for the compensation scheme for goods. First, we will see the goods. So, what is this? Supplier engaged in making any supply of goods, services not leviable to tax. Now, here the person non-taxable goods he is doing. Now, example we know which are non-taxable: alcoholic liquor for human consumption, 5 petroleum products. It is not included, right? It is not coming under the GST preview. So, if you are supplying those, if you are involved in that activity, it is you are not eligible opt for the compensation scheme. Supplier who engaged in the making any interstate outward supply of goods or services. If you are taking interstate outward supply, if you are inward supply you are eligible. Outward supply if you are doing, you are not eligible. Now, person supplying any services through e-commerce is required to collect tax at source. If he is collecting TCS under section 52, then he is not eligible. Yeah, he is providing any e-commerce. Okay, then manufacturer of specified goods notified under section. Here let us see, already we have discussed what are those items. Let us see what is notified goods. Notified goods, these are the notified goods. What are the notified goods? Ice cream and other edible ice, whether or not containing cocoa, pan masala, all goods, that is tobacco and manufactured tobacco substitutes, aerated waters, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil mills or similar siliceous earth, building bricks, earthen or roofing tiles. See, if you should not involve, if you are engaged in only supplying of goods, you can enjoy. See, we have seen in the chapter registration, we have checked the threshold limit. See, if you remember that chart, not, when you are not taxable for the supply from MMNT, MMNT, when you are not taxable from supply from UP MATs, then you are engaged only in supplying of goods. You can enjoy the enhanced threshold limit. How much enhanced threshold limit? You can enjoy the enhanced threshold limit of 40 lakh. But if you are engaged in making means manufacturing and trading, supply of 7 products. If you remember, supply of 7 products. See, what are those 7 products? These are the 7 products. Only aerated water is added here, right? So then compensation levy only when you are manufacturing, that means you can trade. You can trade. And restrictions only for the manufacturing. You should not involve in manufacturing of these notified goods. Is it clear? Now, then here we have understood person who is supplying service through e-commerce. E-commerce. Now you are a trader of electronic goods. You are a trader of electronic goods. See, electronic goods supplying is your primary activity. What is your limit? Turnover is 1.5 crore. You are doing some repair. You are doing some repair. Minimum, uh, minimum sum of the minimum service, minimal service, and it is cost 5 lakh. Then compensation levy, you are eligible under section 10 subsection 1 and 10 subsection 2. That we will call it as a marginal supply. That we will call it as a marginal supply. When we will decide marginal supply? When we will decide marginal supply? See here, 10% of the turnover in any state UT or in the preceding financial year, in the preceding financial year, or 5 lakh, whichever is higher, whichever is higher will be taken. Now you have a 80 lakh turnover from it, 10% of it means 8 lakh, then 5 lakh, whichever is higher will be taken. Then if you exceed, then you will come back to the regular scheme. If you are exceed, then you will come to the regular scheme. The second provision, section 10, subsection 1, allows marginal supply of services here other than restaurant services, not supplying alcoholic liquor for human consumption and not exceeding. Not exceeding. If you exceed, then you will come back to the section that is regular scheme. Now, here, supply who is either CTP and NRTP is not eligible to take the compensation scheme. Supplier of services, save as a provider, section 10, subsection 1. This I have discussed just now. Supplier of service, save as provided, section 10, subsection 1. Is it clear? Now, let us understand. We have understood the goods. We have understood the goods. Now, service industry. If we come to service industry, service sector also booming other than the restaurant services. Other service sectors is kept outside of the compensation preview. All the services are not included. Only restaurant services can opt for the compensation levy. And this here you can see what is the turnover in case of services under section 10 subsection 2a. 50 lakh in the preceding financial year. 50 lakh in the preceding financial year, and this limit is applicable for the compensation levy for services under section 10 subsection 2a. Under section 10 subsection 2a. And what is the rate? What is the rate? The rate is, in case of services, 3%. That is 3% CGST plus 3% SGST or UTGST. Effective rate will be 6%. Effective rate will be 6% on total turnover of the goods and services. Total turnover. Now, let us understand what are the conditions and restrictions. Conditions and restrictions for compensation levy. Person who is opting for compensation levy compel with the certain conditions. What are those conditions? Shall pay tax under section 9 subsection 3 9 subsection 4 RCM on inward supply of goods or services or both. Inward supply of goods or services or both. So what is this? Now, you are working in one company. Registered dealer. He is a registered dealer and he is paying a tax of 1% or 5%. One advocate is providing legal services. Legal services to them. For the legal services, whatever they have received, for that they will pay 1 lakh rupee. They'll pay 1 lakh rupee. Now, on this 1 lakh rupee, whatever RCM comes, you have to pay. That is GST tax. You can't say that whatever 1 lakh you have to receive, you will get a RCM on that, the legal service provider, but you need to pay the tax GST on this. Neither a casual taxable person or non-resident taxable person. They are not allowed. Compensation taxable person is not eligible to collect the tax on supply. Is not eligible to collect the tax on supply. See, you have to mention on the board, notice board, sign board, you have to display that you in your principal place of business, additional place of business, you have to mention that you are a compensation taxable person. You have to mention that you are a compensation taxable person. Then, tax on goods held in stock liable for to reverse charge under section 9 sub 4 must have been paid. Must have been paid. Bill of supply you have to pay. Then this is your understood principal place of business, additional place of business, and registered person who is opting for compensation scheme under section 10 subsection 1 must not engaged in manufacturing of notified goods. We have seen you should not engage in the notified manufacturing of notified goods. These are the conditions and restrictions. And here you can see one service is one kind of supply. One kind of supply is excluded. Excluded from that. What is that? In case you have made any outward supply, you have made any outward supply. See, you are under margin of supply, you are under aggregate turnover and total turnovers, you are under state or union territory. While calculating, these are all you are considering. Now you have made any outward supply. Example, you have excess of money. That money you have given as a loan or advance or deposited. For that interest you will get or discount you will get. Interest or discount you will get. That is an extra separate consideration. This should not be included. This should not be included when you are computing the marginal supply of service, interest on loan, deposit, advances, you will not taking into consideration. This is a provision discussed and it is applicable for both compensation levy under section 10 subsection 1, section 10 subsection 2a. Is it clear? What is the one supply you are not including? It is excluded. That is whatever interest or discount. If you are seen, we have seen the meaning of money related to money. The money related activities. It is taxable. It is considered as a supply of service. But here we are not considering it. Now the next we will understand intimation of opting for compensation levy. Intimation of opting for compensation levy rule 3 and 4. Here you have to fill person who is applying for the registration, they have to opt for the compensation levy part B form GST registration 1. This will be effective date from the registration it is granted. Registration it is granted. How you will be intimated? Intimation to the registered for opting the compensation levy. Electronically file intimation in on the GST portal prior to the commencement of the financial year. Prior to the commencement of the financial year. Always remember, if you want to opt for the compensation scheme before the financial year commencement, you have to get registered under that. Okay. Then funny, you will get a statement as per the rule 44 subsection 4 within the 60 days from the commencement of the relevant financial year. And if you an intimation of any place of business in state or UT, whatever applies, all other places of business registered under the same pan, remember one thing here. Now you have a branches. You have a branches in different states. Same PAN you have registered. You can't say in one place I will use compensation scheme, one place I will use regular scheme. In all the branches, if you are using, only you should opt for compensation scheme. Otherwise, you have to opt for the regular scheme. And regular scheme, if you want to switch to regular scheme, compensation scheme to regular scheme, anytime you can switch. But if you want to opt for a compensation scheme, then you have to opt at financial year, commencement of the financial year. Is it clear? You option to pay tax under compensation levy shall be effective from the beginning of the financial year. Beginning of the financial year. Then withdrawal from the compensation scheme by taxpayer who ceases to satisfy conditions. Who ceases to satisfy. If lapse in aggregate turnover exceeds the prescribed limit. If he is exceeds 1.5 crore, 75 lakh or 50 lakh in case of service during the financial year, then he should withdraw. Then the conditions are no longer met. Person must pay tax under the regular scheme, and he had filed for the intimation withdrawal within the 7 days for the occurrence of such event. Then effective date of withdrawal shall be date indicated by the intimation, and it not be prior to commencement of the financial year. Withdrawal from compensation scheme by taxpayer who intends to withdraw. Now here, the file for the application is prescribed form. The withdrawal effective from the date of specified application should not, but not before the commencement of the financial year. Before the commencement of the financial year. If denial of option to pay tax under the compensation scheme by tax authority, the PO, if he believe that the registered person is ineligible for the compensation scheme or he violated any CGST act, then show cause notice will be issued. Show cause notice will be issued. If after receiving the show cause notice, officer will either he accept the reply or he can deny the option to pay the tax. If option is denied from the effective date of denial, including retrospective date, will be determined by the tax authority, and effective date cannot be prior to the contravention of the CGST Act or rule. Then other points about the cancellation. If UIN holder cannot apply for the cancellation, because UIN holder means he is a NRTP, right? He can't opt for the cancellation. Cancellation does not affect the past liability of the person who pays the tax. Any other dues under the act, if it is there for the period prior to the date of cancellation. Deemed cancellation under CGST Act. Cancellation of registration under either SGST Act or UTGST Act shall be deemed to be cancellation under the registration of CGST Act. Intimation to the taxpayer. If once the registration is cancelled, the tax authority, the taxpayer will be intimated through SMS and email. Order of cancellation will be issued to the primary authorized signature by email and SMS. No filing of return after cancellation date. If the taxpayer are not allowed to file the return for the period after the date of cancellation mentioned in the cancellation order. Liability continues for the past period. If the cancellation of registration will not affect the liability of the registered person for paying the tax and other dues any under this act any period prior to the date of cancellation. This is for the proper officer can cancel the registration by his own. Registered person can contravene the prescribed provision. Then, if registered person is not filed the return for the specified period, if the compensation taxpayer has not furnished the return in the financial year behind the 3 months or from the due date of furnishing the return, means is if he is paying quarterly 3 months, if he is not paid, a due date furnishing monthly 2 months if he is not paid, then he comes and cancellation. Voluntary registered person, if he is not commenced the business within the 6 months from the date of registration, it get cancelled. Registration was obtained means any fraud, willful or misstatements or any suppression of fact if it is happened, then it will be cancelled. Suspension of registration. Registered person if applied for the cancellation, date of submission of the application or date from which cancellation is sought. Cancellation is be intimated by the department on the basis of analysis of certain information. If is comparison of written under section 39, then it will be cancelled. Consequences during the suspension. Any registered person who is registered is suspended during the suspension is not making any taxable supply or is not required to furnish any return under the section 39. Revocation of suspension. Suspension will be revoked upon the completion of the cancellation proceedings by the PO officer. Post revocation of suspension, revised tax invoices or suspension will be revoked by the taxpayer. Two provisions must be followed: revised tax invoice and first return for the supplier made during the suspension period. I hope all of you understood. Thank you for watching. Have a great day. If you have any doubts, queries, comment on the comment section. I can answer to those questions. Conceptual clarity is most important. Be clear with the concepts, then you will not make any mistakes. And in this compensation scheme, last two topics what we have discussed, it is related to the registration also. Registration also it is there, so you can watch the complete video. And if you are not watched my previous videos about registration, supply under GST, introduction to GST, kindly watch those videos for your understanding. Thank you.